And we're sticking with cattle as we dive into the markets today. On Tuesday, I was joined by first-time guest Elliott to discuss beef demand, this month's cattle on feed report, and the rise in beef cattle slaughter. And Elliott says there are a few things responsible for that increase.
Beef cattle slaughter, when we're looking at over the last year and also the 2013 to 2017 numbers, we're really above both of those numbers, considerably over the 2018 numbers and the 5-year average. We're looking at that, and we can break it down between, is it the steers that are being slaughtered more or heifers? And what we're really seeing is that it's more heifer slaughter happening. When we're looking at actual beef cow slaughter, we're saying pretty much since the beginning or the beginning to middle of September, we've seen beef cow slaughter kind of really increase. So much that when you're looking at the individual auction barn sale receipts, there are much more sale receipts coming through there. Some of those reasons that when we talked out to producers, it really seems like the rough winter, the Holcomb fire, and a lot of other these things about uncertainty with the bomb cyclone, a lot of that has caused a lot of open cattle come into the market. And so people are really trying to make the decision, should we retain open cattle through the winter with hay really being looks like kind of questionable going forward, or should we just kind of bring them to market? And it kind of looks like a lot of producers are making the decision to say, hey, I'm just going to sell out some of these old cows and just wait it out.
When can we expect these slaughter numbers to flatten out?
I don't know. So generally, going into this next week and into December, beef cow slaughter numbers tend to drop down. Right now, we're pretty much on a steady upward increase. I would be surprised if we'd continue that pretty much straight line up. I would expect that we probably should see a little bit of drop. Talking with some other sale barns, it looks like they're actually encouraging some people to hold back their cattle, specifically their cull cows, just because the market's just not there for cull cows right now. So we'll probably end up seeing a little bit of that flatten out a little bit, but I don't think we should expect it to go down too dramatically.
So besides slaughter, what does this look like for the cow-calf herd going forward?
Yeah, so we can look at beef cow slaughter, but there's lots of other indicators that show us what that cow herd is going to be next year and what that looks like for feeder cattle supply going forward. So we can look at quarterly placements, breaks it down on feed. It looks at the steer and heifer ratio, and we can look at what does that ratio look like over time. When we look at that, Nebraska is about 0.63, and that's the highest since it's been since 2012. Nebraska or Kansas and also Texas are also at record numbers. And so we're looking at, okay, how many of the heifers are being slaughtered compared to steers? It looks like a lot more heifers are going through the market, and this could be a sign that the replacement herd that's going to be available for breeding next year is probably a little bit smaller. That's going to be reflected in USDA's 20-year projections when we're looking at, okay, what does this look like? They're projecting at about $1.60 going forward, and then in 2021 it's going to be much higher in the $1.80 range.
With that cattle on feed report that came out last week, is there anything of note you want to mention on that? Yeah,
so the pre-report estimates were pretty much in line. I think the big differences there had to do with the type of cattle being placed and also where they were being placed. So big estimates were that a lot of heavier cattle being placed. We're talking 700 to 800. Normally those types of placements we don't really see until May, and sometimes even in the September range. But really heavy cattle being placed, we're looking at where these cattle are being placed. We're talking Colorado, almost up 23%. Large increases in Texas and Kansas, not surprising. But Nebraska was down about 5% year over year. So that's kind of when we're looking at a lot of the feedlots are pretty much front-loaded right now, heavier cattle that's going to be marketed. And we're looking at, well, why is that happening? Well, looking at the board, the live cattle contract is pretty much trading at 125, and both in the February and the April months. And so a lot of incentive for them to place heavier cattle and to push cattle forward a little bit to capture those premiums.
And let's talk about beef demand a little bit, especially as we're getting into the holiday season. What's that looking like?
Yeah, so I mean, right now we're going to have a lot of exports just because of ASF. really what we're talking about is ASF is really going to dominate beef demand forecasts going from 20 and 21. Pork is probably the most dominant kind of player in there. But as pork demand increases, so does beef demand. That's going to pull domestic beef product outside the market and probably going to continue to increase some prices. One thing that's been kind of interesting is beef has been featured a lot in ads lately. So much that even during these times of even pork, when pork should be featured, there's a lot of beef featuring. So I think that's really strong, healthy domestic demand, pretty flat. But where that demand is really going to happen is going to be in the export market. So as we continue to increase production, a lot of that production is going to be displaced in the export market.
And finally, we always like our analysts to share any marketing advice, risk management tips, maybe anything that you haven't mentioned for the cattle producers out there. What would you like to tell them?
Yeah, I think just this year is a really good example of the need to manage price risk and really kind of put out a marketing plan and saying, what does this expose me to? When we're talking about the big movements with the corn run-up in the spring, with the delayed planting, with the Tyson fire, this I think was just a good example of, hey, we need to do a better job of putting together a marketing plan and manage our price risk. And so I just encourage people who don't have a marketing plan to sit down with an advisor or to contact me or some other of the ag economists here at UNL and help you kind of work through what that questions might be. And we'd be more than happy to do that and make sure that we're profitable moving forward.